Welcome to the Total Money Management Podcast, covering off June 16 to 20. How are we, gentlemen?
Good, mate. Steve's
won
a bit sick.
the second Origin.
I know.
Damn all you Sydney people.
The last 10 minutes had me just
Oh, yeah, that was...
fighting for my life.
I don't even really follow NRL and I was stressed
Yeah.
that whole second half. I
Yeah,
was like,
yeah.
This has to be a joke.
But that one of, like, at 26-6 at half-time, even 20 points in front, I thought, no, we're not going to blow that. Surely we can't lose, like, from 26-6. And then when they kept coming back, it was like, no, it's not going to happen, Steve. And like you say, the last 5 minutes on the line was like, they're going to beat us. They're going to get over the top of us, so...
If only they could kick, eh?
Yeah. Well, it's funny because they always talk about, we won the game. And I look at it and go, they scored 5 tries and we scored 4.
Yeah.
They actually played better than we did in my mind, right?
Yeah.
But, I'll take the win. But I just sort of thought, they won the second half. Well, we didn't score a point and they scored, 20... did we score in the second half? No. And they scored 20 points. So we won the first half by 20 points, 26-6, and they, we must have kicked a...
No, I don't
Anyway,
think we did.
we'll keep the NRL podcast for next week.
Yes. Anyway.
We won, that's all that matters.
There's a couple of wars and a few other things.
It's just nice to talk about something else that's not about politics or...
But I don't think the listeners are going, I'd love an Origin summation.
Yeah. There's another podcast that recorded here before us.
Yeah.
100%.
Anyway, what do we got, gents? What do we got?
Starting off with the big issue, right? G7 met this week. What are we looking at, Steve? What's your hypothesis?
That was a bit of a...
Trump left after about 5 minutes.
Yeah. It was all a big deal. Albo's going to meet Trump. Trump went and sort of, did what Donald Trump does.
Showed
and
face.
then said, right, I'm out of here.
Well, he said something about, what was it? It was like, get everyone out of, what was that place in Iran?
Tehran.
Yeah.
Yeah.
Which was quite ominous. And then nothing really much has happened since then.
Well, it's just... The thing is these days, when you do a military operation, it's not like, just fire off a few bombs. There's a lot more to it. Where we're going to hit, you got to watch out. You've got to watch out within reason for civilians, all of that,
Within reason.
Hey,
Within reason.
I say within reason because, what
they
they've done in Gaza is terrible, the Israelis. And so that's what I mean. It's a bit like, we didn't know that hospital was, full of sick people. That's the way war is, right? And Russia's doing the same thing in Ukraine, right? Killing civilians and bombing indiscriminately. So the question is, does it get any worse? But markets seem to have gone, no brainer.
It's kind of
nothing burger, let's move on.
Yeah, it's been a bit volatile, but nothing.
Well, it's not Liberation Day, is it? But and even oil spiked, 3 or 4, and then sort of calmed down a bit.
Yeah, I mean, energy's continuing to look better.
The longer it goes, I think the better it looks for the longer term. Anyway, but in terms of oil, but I just the main argument is, do they close the Strait of Hormuz, which is where a lot of oil goes through? And the really creditable guys seem to say no, they won't.
China gets a lot.
Right? China. Well, see, this is where geopolitics becomes really important because there's two second and third level issues going on, and so. China is buying Iran's oil really cheap, right? So China's going, this is great, we're getting all this oil really cheap, right? Okay, so what's one way that you would annoy China? Well, you could annoy China directly, or you could, bomb Iran and cause
the oil.
Cause some chaos there. So that's where you've got to look at these other interconnections to see what's going on.
But that'd be a negative impact on America because America want to keep their oil prices low as well.
Well, yeah, but Americans have got enough oil. They've got it's. the argument is that this is the way I see the world. We are now in a bipolar world, and it's America versus China. And on the American side, you've got England and Australia and, parts of Europe and stuff. And on China's side, you've got China, Russia, Iran, and North Korea, right? They're the sort of main ones, right? So everything revolves around that, right? And we talked about that on the coaching call with rare earths.
Yeah.
Right? It's the thing we've got to get used to now is when economists come out and talk about stuff, really, and I'm not being rude, but really you can basically ignore them because lots of economists are talking about tariffs and they'll get it sorted out and we'll all be friends. That's like, no, we're not. I mean, Jesus Christ, like China's using rare earths as a weapon, and understandably because they've dominated. But the American government is not going to say, righto, we need 30 tons of samarium, and they go, oh, it's too expensive. No, we'll just not bother building those planes. It's like, oh, sorry guys, that's not going to happen. They'll just buy it, right? And if they don't buy it, which is what they're doing now, which is creating their own supply chain. Right? And it doesn't matter what the cost is because it's not a cost issue. It's a national security issue.
Yeah. There's just so much to untangle.
Yeah, well, compared to what it's been, Tom, yeah, it is. That's why I say it's, the old idea now of free markets and we're all flying into each other's countries and all this is really good. Nah. The next bogey for me is immigration. Everywhere. Right? Everywhere.
What do you mean? Lockdown on the gates, basically.
Well, you'll get nationalism. I could be wrong, Jacob. You might know more than I, but the stuff I'm looking at in England and Ireland with immigrants flooding in and causing problems, and also in parts of Europe.
Yeah, I mean it's a hot topic, isn't it? Immigration just globally. But, I mean, England has had issues now for probably 20 years, and it's gone too far and it's got really nationalist where you've got the right who don't want any more immigrants.
Yeah, well, that was what Brexit was about. Yeah. Brexit was basically a vote on immigration.
Yeah.
Right? And that's where I reckon that's the next big one for me, I think. The next big one will be, and I mean, Trump's already doing it, right? He's deporting the illegal immigrants. It's all high-profile stuff. It's all over the news. In America, it's all over social media, right? And that's part of the strategy, right? Because illegal immigrants will go, "Oh, you're going to America," because they grab you and toss you out, right? So that's going to decline, and all of that. America usually leads the world in ideas, right? So when we went from being protectionist in the 70s to the early 80s, the late 70s was the election of Thatcher in 78 and Reagan in 80, right? And they brought in the new idea, which was free markets and all that sort of stuff. Everybody fell in line with the Americans, right? But now Donald Trump is reversing all of that. Everybody's going to have to reverse. Right, because they're the elephants in the room. You can't generally go against elephants in the room. So Australia's going to have to adapt. Thailand, Malaysia, Ethiopia, they're all going to have to, and that makes investing a little bit harder. Because I think I might have been on the coaching call or something where I said companies you can see are moving a lot more now based on what Donald Trump says. Right, pharmaceuticals, all that sort of stuff, right? And
I find it really interesting, especially the last couple of weeks with the wars kicking off, all the slow-moving kind of coal stocks and oil stocks that are just gone through the roof because at the end of the day, people are getting scared about supply and demand on those specific things.
Yeah. Well,
with AI ramping up too, right? Energy. More important. All this talk about nuclear.
Hard assets, Tom.
Yeah.
Hard assets. I mean, do you really want next year's iPhone that bad, or do you really just want to make sure you've got enough coal and iron ore and stuff? And it's like, I'll take the latter. Mm-hmm. And that's why I say, this is what we talked about in the new normal, from intangibles back to hard assets. right? And that's what the arguments are about at the moment. I mean, rare earths are, they're minerals, right? They're hard assets. Don't have rare earths, well, you don't get planes and boats and cars and everything else, right? So you need to secure that. That's why commodities will do well over the next decade, because even though we've got enough supply in the world, the problem is if we say, well, we can't buy them from China, then essentially what you're doing is lopping out, well, you imagine if they said, well, we're not buying rare earths from China. Well, first of all, you're basically knackered, right? Because China's got all the capacity for processing.
Where are you getting it?
Where you're getting it. So, but what I mean in terms of supply and demand, the price looks okay at the moment. But if you lop off 50% of the supply and you've got the same amount of demand, well, now you've got, 100 tons of demand with 70 tons of supply, instead of saying, oh, well, we've got 100 tons of demand and we've got 180 of supply because of China. If you lop off China, you go, oh, hang on.
Suddenly less to go around.
Exactly.
Yeah.
So how do you deal with it? The price rises, right? And the government will say, we don't care what the price is. We got a strategy that we need to build our own supply chain, to have our own weapons, blah, blah, blah. Doesn't matter what it is, we'll pay. And that's why...
Would that be inflationary?
Absolutely.
Yeah.
Absolutely. And also, see, that's what...
segue into the
more,
second
more,
point.
more inflation.
Yeah.
Well,
Awesome.
the other thing is too, see, like, I think we've got it here. Trump has taken what they're calling a golden share in US steel, right? The Japanese have been wanting to buy US steel, and they went, no, nationalism, all that sort of stuff. Anyway, basically, what they've come up with is Trump has the golden share, which in essence means it's, loosely nationalised, because Trump gets the final say on what goes on. You're going to see a lot more of this, right? Trump said, I think a couple of weeks ago, if necessary, they'll look at taking a stake in mining companies, right? Because the problem is at the moment, China is really cheap, right? That's why everybody's over there. So when you say to someone, look, I want you to open that mine and, send us the rare earths because we need them for the planes, and you say, no, I can't do it, mate. It's too, it's too expensive, right? Just go to China. It's like, well, you can't go to China. It's like, okay, well, it's, $140 a ton. The government doesn't go, oh, yeah, okay, let's forget about that. The government says, mate, open the mine, what do you need, and we'll deliver it.
But they might subsidise it for local companies and
Yeah,
that.
absolutely. Well, that's what sort of tariffs are really doing.
Yeah.
Tariffs are not a subsidy, but they're basically saying, you can buy. That's what the Asian countries do to America.
Yeah.
That's why I say, like they've all got tariffs. They've all got non-tariff barriers, like all these rules and stuff, right, to keep America out. And the Americans have finally said, okay,
Yeah, we'll play that game too.
we've had enough. And now everyone's screaming. It's like, well, what do you expect?
Yeah. So golden stake in steel, could that also be in something like coal, oil, to kind of give a steady supply into it?
Well, probably not oil, because the US is already big in oil and gas.
It's got plenty of
anyway.
reserves.
Yeah, but it in things like critical minerals, semiconductors, Biden came out with the CHIPS Act and the Inflation Reduction Act, right? Which is really badly named, but it's all about creating the supply chain.
Yeah.
Right? Which was, I think it was 50 billion, 150 billion for, subsidies to get the companies to build factories in America to make the cutting edge chips. Right? So that's all China did. I saw one today where Mayatoshi's son, the guy, can't remember his company, but he's talking about building a $4 trillion investment in the US based around robotics and AI and all this stuff. Well, that's what they want, right? They want to build their own robots. Okay, well, you need advanced materials, chemicals. Oh, well, they're all in China. Not anymore. So you got to, it's the reindustrialization of America, and it's not a 5-year plan. This is like 20 years, 10 years at least.
Yeah, well, it's the new normal, right? What with outside barring it too much. What are your thoughts on uranium lately? Because that seems to be going gangbusters.
Yeah, it has for a little bit. I've got to be honest, I don't know that much about uranium, but
it's very honest.
The argument is, what's that?
It's very honest of you.
The argument is that if AI takes an enormous amount of power, right, to generate. So the Americans has really got enough power currently to manage what they believe AI will need, right, in data centers. So and that's a really big cost. Okay, you want to keep your costs down, you want to get cheap energy. What's the cheapest form of energy? And one of the cheapest forms is nuclear.
And it's
right?
cleaner.
Well, it's cleaner. Nuclear's always just had a bad name because of the environmental waste and Hiroshima and Nagasaki and stuff. But the French have got, I think, something like 75 or 80% nuclear energy.
Oh wow!
Yeah. The French are huge into it, and so the argument is, well, we're going to need a lot more uranium to build these modular reactors, right? And they're getting into what they call small modular reactors and all that, all that sort of stuff.
Well, I think it's fair to say we're probably a little bit safer now than we were in the Chernobyl days.
Yeah, I would think so. But it takes a lot of money to build
time.
Yeah, it takes a lot of money and a lot of time. But if you commit, well, you got to commit, and there's really only one source of never-ending, capital, and that's government.
Yep, 100%. If they see it as a viable solution, it doesn't matter what it's going to cost.
Yeah, that's exactly right, Tom. And that's where you get a little bit of an arm wrestle for resources.
Yep.
Right. So do we use do we use the rare earths for military planes and weapons? They don't need that much, but it's still an amount. Or do we allow the market to allocate it to Apple and EVs? Well, if the government says, dude, we want the jets, it's all over Red Rover. We know where it's going first. So that's going to be the issue with it. But Australia's got the third, I think we've got the third largest amount of uranium in the world, the reserves down in Olympic Dam, which is owned by BHP. It's not going to sit in the ground forever, mate. There'll be too much pressure from everybody going, guys, you can't just sit on all that uranium, because the argument is also too, well, if you guys are sitting on it, then the price, instead of being 100 a tonne and you guys hitting it with the market, it's 185 because you bastards won't dig it out of the ground.
Yeah.
Right. So, that's going to be an argument that Australia has probably over the next 5 or 10 years. But Albanese's come out and said, no nuclear power and stuff. So I don't know.
We'll see. Like you said, people have been turning on a dime lately with all kinds of big decisions.
Yeah.
So.
Well, I think, Tom, this is where governments start to shape people's thoughts about issues, right? And that's why at the moment there's so much sort of propaganda and stuff. And I was just thinking yesterday, now that we've got wars going on between Iran and Israel and Russia and Ukraine and India and Pakistan, there's so much information out there now, and there's so much propaganda. I read just this afternoon where there's been Russian and Chinese, I think it's Chinese as well, but I know it's Russian. I think it might be just Russian. Russian bots hitting social media and causing division against, in between MAGA, Make America Great Again, the Trump supporters, right? So trying to create chaos like that. So that's why I say, I wouldn't be shocked in 5 years if there was no foreign media things. So in other words, you wouldn't be able to read Russian news or Iranian news. You'd be like, nah, this is your new world.
On an American platform.
Yeah.
Just go cut the cables in the sea.
Yeah. Well, there's all of that stuff going on, right? And that's what I mean. We're basically the world's at war, and I'm not exaggerating.
Lots of little wars with each other.
Yeah, well, it's just the start, Jacob, of when you get two big powers like America and Russia or America and China, you have proxy wars, right? So you have them somewhere else, like Israel versus Iran, right? Or India, American supporter versus Pakistan, Russia and Chinese supporters. And that's why I said Africa. You watch Africa, it's going to go off because it's got heaps of resources, right? The Chinese have been in there, and now the Americans have got to play catch up there. Putin is having trouble, in all of his previous places, Syria, Moldova, Romania, so he's sliding down the tubes.
Right.
So, that's why I say
Africa's the battleground.
Sorry?
And Africa's going to be the battleground.
Well, I think so, yeah. Well, it's untapped, mate. It's untapped. Look at the resources, right? It's untapped.
Is Africa emerging market or
Yeah.
or
generally South Africa?
Frontier? No.
South Africa is an emerging market.
Yeah.
The rest of them are, places like Nigeria and stuff. But you'd be surprised in terms of I think Nigeria is one of the leading ones, but a lot of the I remember
have like many ecosystems within each country almost.
Well, it's like the Middle East. It's long history and it's very tribal, right? So you want to walk in there and go, hi, we want to dig up all this stuff you got, and they go, yeah, and then you figure out you got to deal with 140 tribes. It's a bit like, man, this is going to be an effort, right? And they all hate each other, and they're all trying to get the money and all that sort of stuff, telling you what you want to hear and then lying, and so it's really, really hard, right? And this is what we had back in the 60s and the 70s. Right? The Americans went into Chile and killed Pinochet, right? The communist leader. The Americans said you got to have an election, right? Be democratic. And the Chileans went, yeah, righto, so they voted for communism, and the Americans went in and killed him.
Jesus.
Wow.
So it's a bit like, but hang on, we voted for him. It's like, yeah, not on our agenda. But the American CIA and stuff, they do that all the time.
Just put a bullseye on someone.
But that's why I say we have not had a lot of this for 30 or 40 years. And as investors, you've just been going, sure, you just buy companies and, it's all really good. Whereas now it's a lot more complex.
Yep.
All right, so let's talk about bear market rallies in the lesson of the week.
Well, we got two things we want to kind of cover off lesson of the week, right? We're going to cover off bear market rallies and also a bit on rebalancing. Yeah. Because I know we've had some questions about that on the socials.
Mm-hmm.
Yeah, I just stuck that bear market rallies in there just to remind people, because I'm undecided whether we have a GFC type fall where it goes 50% in a year, or whether we have the 1965 to sort of 1982 where it falls, like you get a lot of volatility, but essentially it falls 50 to 60% over 15 years. I'm sort of leaning towards that one, and the reason why is there's just so much debt around. But it also leads into when you have a bull market, you don't have to rebalance, right? Because you buy it cheap and it quadruples, right? That's a secular bull market, right? So you look at it, if you rebalance since March 2009, you'd have done really well, but you wouldn't have done probably as well as someone who's just buy and hold, because March 2009 was really cheap, right?
Except the downside is you don't know when it's going to end.
That's exactly right. And that's why you got to have a mark where, if you look back at history, Cape gets to about 25 or 26, and that's what it got to in about 1965. That's when you start to think, okay, we're starting to get a bit over the top. That's when you might say, okay, now I'm going to start rebalancing. And the higher it goes, the more you should take off.
Yeah, righto. Okay, so doesn't hurt if you get if we have the opportunity to have an outrageously low cape, go hard.
Yes.
Once the cape starts to creep back up, start playing a bit more conservatively. Don't.
Yeah. Well, it's just
get out completely, but
yeah, and that's the reason the bear market rallies there is because in a bear market you've got to rebalance more often, right? Because you go up 10%, you go, like if you look at that document there, it goes up and you think, hey, cool, we're back on the run here. Then it goes down again, right? Oh man, I should have taken some off the table. Then it goes up again. No, we're back again. Then it goes down again, right? So that's why I say the rebalancing is really, really important. First of all, you've got to establish whether you're in a bull market or a bear market. Because if you're in a bull market, you can probably relax a little bit until cape hits 25 or 26, right? But if you're in a bear market, you might, every 10 or 15%, you might think, okay, I'm going to take some off the table.
It's really hard to do that, though, when you've got the media saying, oh, we're not in a bear market, we're in a bull market, oh, we are in a bear market, and they don't actually tell you definitively this is what we're in. Because it
depends on the day, mate.
Yeah, but
signal versus noise.
Yeah, but the hard part about rebalancing is rebalancing in my mind is a subset of asset allocation, right? You put in some money, $100, and you come back and it's 140, and all you're doing with rebalancing is saying, am I going to leave that money in there, or if I had to put money into it now, would I buy it at 140? Right? So the biggest problem I've seen with rebalancing is everybody wants to be perfect. Right? Everybody wants to sell at the top and buy at the bottom, and it doesn't happen.
No.
Right? And that's the biggest problem, because as I sort of say to people, you rebalance and it goes up. Oh man, I knew I shouldn't have rebalanced. Knew I should have waited. Right? You rebalance and it goes down. Oh man, I knew I should have taken some more off. Right? It's just the way it works.
Well, in reality, the compounding effect of rebalancing regularly is where the money's made anyway.
Yeah, yeah.
Not necessarily buying low and selling high.
And that's what people don't get, the mathematics of volatility, and that's where it's different from property. See, property you can't rebalance. You can't buy $1 million property and at 1.3 million go, I think I'll just take 300,000 off and, leave it at $1 million. Well, you can't do that. So there's no, and because properties are sort of low liquidity asset, there's not a lot of volatility with it, right? Even if there was, well, there's nothing you can do about it unless you want to sell the whole property or buy the whole property. Whereas with stocks, you can rebalance every day, right? Every week, every month, every 10%, right? So that's the really important part. But it's generally better to rebalance on a time basis. Every year, 12 months, one day, all right, rebalance and get on with it. Right?
Yeah. Well, I mean, Brendan on Instagram, I'll read it out. He's like, it'd be awesome if you could go into at what point in time you look to rebalance. And I guess the answer is different depending on the outcome that you want.
Yeah. We will do a rebalance, daily, right?
Yeah.
Okay. Well 2 is more like we rebalance every 12 months and one day because you got the capital gains tax, right? Well 3, you can rebalance annually, or you could say, oh, well, I'm just going to let it run for 2 years, right? It really depends. The tax consideration is important, right? But it also, and again, this is the hard part. Unless you have a system and you know how rebalancing works, it's really hard because you don't, as I said before, it feels wrong when you go, man, this thing's killing it, right? Like you think we talked about 3 coal stocks a month and a half ago, 6 weeks ago.
Yeah.
Right? Now, I think one of them's doubled. So you look at that and go...
Told you so.
But, sorry?
Told you so.
Told you so. But you know what I mean? Like you look at that and go, oh, man, this is really great. Now, one thing you want to consider is to say, okay, will it go up further? Now, it may well do because it's got a ton of momentum. But, it's that old adage, you don't go broke taking a profit.
Yeah.
Right? And so you might say, all right, well, I know it's only been 6 weeks, but man, oh man, this thing's gone crazy.
Take 50% off.
I'll take 50% off, right? If it goes up further, the other thing is too, Jacob, and I used to do this, right? I would look at my stocks and I'd sell them and I'd go, 5 months later, right? I'd look at it and I'd go, oh man, it's gone from $2 to $2.20, right? And then I'd go, okay, and I had 1,000 shares or whatever, and I go, oh, actually it was another $500, right? So it's not like you went, oh man, I just, I sold a video at 3 cents, right? Like it's not like that, right? And it doesn't. One of the problems you have is bragging rights, right? Because you're not able to say, I bought a Russian bank called Sberbank, right? And I bought it really cheaply in 2014 when Russia first invaded Ukraine, right? And the stocks dropped. It was insane, right? So I bought some of Sberbank. Then I bought went up like 250%, I think. Then I bought some more at some sort of point. So I had 2 lots going on, right? But I had some, for example, at $1 and some at, $2.20, for example, right?
Yeah.
Well, when I sold some, my profit went from, 320% to 140, right? Because you sell the first tranche that had the most profit, right? 140 is great, but it's nothing like 350, right? And you can't sort of, you feel the need to say to people, no, I've made more money on that. No, I've made more, but I'm just telling you, like I rebalance. Yeah. And it's just all that psychological stuff.
Yeah.
So the answer is really depends on the time frame that you're looking to invest in and your strategy.
Yeah, and in terms of individual companies, and to a certain level, to a certain extent, indexes is it cheap or expensive?
Yeah.
Right. You can buy a company at PE of the coal stocks, right? They're on a PE. They were on a PE stock of like 6 or 7. Okay, but if they double or triple, then it's a completely different situation because you can look at it and say, well, hang on, everybody's in this stock now. That's probably a good time to get out.
I mean, if they double, it's still a PE of 12.
Yeah. But do you know what I mean? Like if it goes up even more, there is a point where you go, well, hang on, this is now on a PE 21. It's probably a good idea to get out.
Yeah.
Right? But it's really hard because you're looking at it going, man, I'm up 400%. I'm killing it.
Well, you change your weighting, right?
Well, yeah. That's why, you want to get, ultimately what you want to do is get to the point where you're playing with house money, right? You spend 10 grand on a stock, it goes to 22, you take 12, the house money is all you're playing with, right? So, in that way, you look at it and go, well, if it went to 0, I'd still have 12 grand. I put 10 in, so I'd still be up 20%. Right? So it's just, but the most important part is there's no perfect time, right? You'll sell it, it'll go up. You'll buy it, you'll rebalance, it'll fall down. If it falls down and you buy more, it might go down further. Oh, man, I knew I should have waited, right? If it goes up, oh, man, I knew I should have bought some more, right? It's just the way the market works.
Always have cash.
We'll always have cash. And, again, just adjust it to, like you can, if it's really cheap, well, if you've got an allocation of 10 grand, we'll put 8 in and keep 2 in cash.
Yeah.
If it's not that cheap, we'll put 6 in and keep 4 in cash. Right? That's the way to really think about it.
That's good. Brendan, hopefully that answered your question. If it didn't,
give us a ring.
What's next on the list? Week that was hot topics.
Yeah, there was one there I wanted to, just that that chart. Oh, no, not that, sorry. The bigger picture. I should put my bloody glasses on.
It might help.
Well, you'll be old one day. Righto, yeah, priests of China wouldn't turn capitalist and therefore. I just talking what we're talking before and just showing you there. That outlined a story about the rare earths. It's quite amazing sitting here today thinking about how economics so dominated where the Americans put themselves in a position where they couldn't defend themselves with their military because they relied on their enemy for critical minerals.
Mm.
That's the problem with individualism. You see, because all of those companies individually were going, we should just get it from China. We should go to China.
Yep.
Right? We should close our factory here and take it to China.
It's cheaper.
And individually, that was great. They all making more money. But in a group sense, the Americans are going, dude, we can't even build our own planes.
Really exposed.
Right, yeah. And that's where it's been, this is what we're now in the throes of reversing. And believe you me, we ain't going back to free markets.
Mm.
It's just a matter of how painful it's going to be.
For those who haven't subscribed to the week that was, jump on the website, subscribe. This one's particularly good. Like lots of good articles, graphs, some of the stories that we've touched on in more detail.
Yeah.
Jump on. It's free.
Cool. And
Good plug, Tom.
And then the last one is the hot topic on allocation of stock. So that folds into rebalancing. The
rebalancing
as well.
All I'm pointing out there is one thing you can do, and this was done by John Templeton. Basically, you look at the valuation and say, okay, if it was really cheap, I'd have 80% of my money in stocks, right? Cape's at 12. March 2009. World's going to hell in a handbasket, but the Cape's at 12. Okay, I'm going to put a lot of money in the stock market, right? Or a sector is really cheap. Energy, right? It's really cheap. Or a country's really cheap. Brazil, right? That's where you want to go. And all you have to do is be a little bit braver and say, okay, well, Brazil looks horrible or, for a whole raft of reasons, blah, blah, blah. But hey, it's probably not going to go broke. Yep. Okay, good. Well, I'll put more in there.
Yeah. And I'm not going to put all of my cash there.
Yeah, yeah, absolutely. Over allocation is the number one problem because people go, 10 grand Brazil. Oh, I'll put 10 grand in Brazil. And like I say, you always want to say to yourself, we say don't lose money, but a part of that is saying, what if I'm wrong? Oh, well, that'd be a real bugger. But I've still got $4,000 in cash. Okay, cool. And if you're right, don't worry about it. You made money on your $6,000, right? But the quintessential question is, what if I'm wrong? Oh, if I'm wrong, my 10 grand turns into 5 and I'd be really shitty. It's like, okay, well, don't bet 10 grand.
Whereas if you deployed your money sensibly and you'd put 6 in, but it dropped 50%, you've still got a pile of money to buy in.
That's exactly
bring
right.
your buy price down.
Yeah.
And then rebalance on the way up.
Exactly.
Correct. All right, gentlemen. Well, good to see you both. I think we might wrap it up there.
Yep.
We'll see everybody next week, hey?
Cheers,
Thank you.
folks.
Cheers.
As always, remember, we don't provide financial advice.